During this COVID pandemic, service industry with a technology focus got operational in less than 15 days. One of the factors we have observed that some of the service companies are able to give their financial guidance as well as operations and adhere to it. It's not surely by luck. It's all about planning, deciding the key financial metrics, and tracking it effectively with the tools. Today, we are touching some of the key financial metrics from the knowledge service industry should look upon. In this session, Vishwas Mahajan, serial entrepreneur and advisor to so many companies and industry association, and Mayuresh Deosthale, managing partner, Nexgen CFO, will touch upon these financial key metrics. Over to Vishwas for the webinar.
Thank you, Satish, and warm welcome to everyone to this webinar, the financial metrics to survive and thrive in these current times for services businesses. And I'd like to welcome my co-host. His name is Mayuresh Deosthale. Mayuresh, can you just say hello to the people?
Yeah, hi Vishwas. Good morning, everybody.
So let's get started. Just to introduce Mayuresh, Mayuresh is a managing partner of a virtual CFO firm, which is Nexgen CFO. And he has turned into an entrepreneur after about 20 years of working in corporate finance and CFO roles for a number of companies. Some of them you may know: MasterCard, Quality Kiosk, Bajaj Alliance, Standard Chartered, Siemens IT. So I think for this topic, we have most suitable person to talk to us about it. As Satish mentioned, my name is Vishwas Mahajan, and I'm a founder CEO of Whizible. You know, Whizible is an integrated solution really for services businesses. And we've been in this business for about 20 years altogether in helping these kind of companies to optimize the utilization of resources, time, skills, and improve the profitability of these organizations. So to that extent, we've had the opportunity of seeing a number of companies from an engagement point of view. But today, I'm going to wear a different hat. I'm going to wear the hat that of a owner or a CEO or a CFO of a typical services organization, and ask Mayuresh some questions that are on top of my mind and get his perspective on the subject. So let's get started. As I said, I'm going to wear the hat of a owner, CEO, CFO of services business, of knowledge services business, of what you call as professional services business. Now, when I sleep, these are the questions that haunt me. Is my incoming business pipeline sufficient to cover my costs? Am I utilizing my current resources efficiently enough? Is there a bench that is consuming cost and not delivering value? What is the lag in my efforts that my team does and my ability to bill? When I do fixed price projects, and I do those quite a bit these days, what is the effort that I cannot bill, that is unbillable? And finally, it's going to be fifth later this week. So I'm worried. Do I have enough working capital to manage the timing of the incurring of costs and realizing cash? Now, these are some of the questions, and I'm sure you have your own questions. And when I discuss this with Mayuresh, he talks about several ideas, several processes, several things we should be doing, to do with revenue forecasting, resource management, billing efficiency, etc., etc. And I have a question. What exactly needs to be done? Please tell me. And here is how the conversation goes. So the problem statement 1, cash flow. Managing cash flow is a challenge. What can I do to optimize my cash burn? Now here, I'm not sure where my cash is going. What actions should I be taking to conserve cash during these difficult times? When my visibility is low, how can I continue to be operational? And when the business is also low, how much should I be spending on sales and marketing? And where do I do it so that I can get the best bang for the buck? And these are all related, but I thought some of these problem statements to do with cash and managing cash. So Mayuresh, can you please share your thoughts on this? And then we will jump into the metrics.
Thank you, Vishwas. Now, this is a very critical topic that we are discussing today. I'm sure this is something that is on the top of every business owner's mind. Cash. Just like oxygen is required for a human being to survive, having enough cash is paramount for survival of a business. So what we will do is, the questions Vishwas has put forth now relating to cash, these are very sensitive, and I think most owners today are going through it. So what we will do is, we will look at certain metrics that as business owners or as CFOs or senior business leaders, we need to track so that we get a good grip on our cash, our costs, and how we are utilizing it. The reason why we are looking at metrics is because what we can measure is what we can improve. So let's get started. Moving on to the first metric, the burn rate in the business. In today's challenging times, when we are seeing that new business is hard to get, and there is a lot of uncertainty on whether existing clients will renew, not renew, or will have a cut in their budgets, it's absolutely vital to track the cash burn metrics. As a business owner, it helps you not only to take grip of your costs, but also to assess the overall financial health of your business. Now, what does a burn rate mean? Simply put, a burn rate means what is the cash that the business uses or consumes in a month. It's a critical metric to gauge the financial health of any business. As a business owner, I need to have a firm understanding of what is the cash that is required monthly to run my operations. Now, how do we calculate the burn rate? There are actually two methods in which you can calculate the burn rate in your business. The first method is the net burn rate, which is basically your monthly cash in minus your cash out. For example, if you are spending 10 lakh rupees a month in your business and your collections from the customer is, let's say, 5 lakh rupees, the net cash burn in my business is 5 lakh rupees. The other way to look at the net burn rate is basically to look at what is the cash balance in my business bank account in the previous month minus the cash balance in the current month. So, for example, if I have a 50 lakh balance in my bank in the previous month and in the current month I have a balance of 45 lakhs, my net cash burn is 5 lakh rupees. The other way to calculate the burn rate is to look at the gross burn rate. What is the total amount of cash that I am spending in my business every month? Now the question here is, which burn rate as a business owner or as a CFO should I use? And this question is important because on the face of it, it may seem that the net burn rate is the most useful of the two metrics. After all, net burn includes the cash that is actively coming into the bank. However, it's not that simple, especially if your current revenue is dependent on a single client. Losing that client may actually change your cash burn calculation. So, in this specific case, it is recommended that a gross burn rate will provide a better look into the business financial health. However, as a general rule, I would suggest business owners and CFOs to keep both the burn rate metrics in mind to avoid unpleasant surprises. Moving on to the next metric, the financial runway. Now, having optimized or looked at what is the cash burn in the business currently, it is extremely important for the business owners and CFOs to know how far can the business go with the available financial resources. In other words, how far can you go with the fuel in your tank? Isn't it that a very important aspect? So when we look at the financial runway, it's basically the amount of time a company has before it runs out of cash, or the time that the business owner has in terms of generating a positive cash outflow. A financial runway for the business owner is extremely crucial because with the financial runway, he gets a sense of how long he can continue with his available financial resources. Or, in other words, how much time do I have to acquire new customers, that is fresh cash inflow, or to even obtain external funds. Normally, financial runway is calculated in the form of number of months before the company runs out of cash. And as a formula, it's basically a ratio of what is the total cash available to the total net burn rate for the business. So, for example, if all my existing financial resources put together, my balance in the business bank account or the unutilized cash credit limit or the investment is, let's say, a crore, and I'm burning about 10 lakh rupees a month. So I have got a financial runway of 10 months to survive with the existing resources. Now that kind of gives me a breather to say, okay, I have time. I can, even though the business is slow now, I can go out into the market and, I have time to get new customers. Or even if I have to organize external funds through financial institutions or through investors, time. So I have that breather in terms of organizing the finances. But let's say if my remaining runway is only 1 month, then it's going to be a challenge for the business. How do I make sure that I sustain beyond that 1 month? So really, financial runway is a metric that actually helps you understand how much fuel do you have in the tank and how far can I go. So having looked at the burn rate and the financial runway, let's come to the third metric, that is the customer acquisition cost. Now, this is actually a tricky one because in these times of financial crisis where business is probably slow and low, and the sales and marketing effort really doesn't show an immediate return on investment. So each business owner is going through this challenge of how much should I spend on sales and marketing? What will be the right amount that will give me a bang for my buck as I spend on sales and marketing? I need to spend on sales and marketing because that is going to bring me future business. But how do I keep it optimal? So here's we have the customer acquisition cost as a metric. Now typically this metric is used in a product business, but I am a big fan of applying metrics used in different industry verticals to the other industry verticals because it kind of brings in the best practices. So normally for a services business, a related metric would be the selling general administration overhead as a percentage of revenue. So customer acquisition cost will actually help you track what is the return on investment that you're getting on your marketing, or it will help you to improve your profit margins. So how does a business calculate its return on investment or customer acquisition cost? It's basically what you spend on sales and marketing divided by the number of customers that you get. Or for a services company, it would be sales and marketing spend divided by the total revenues expressed as a percentage. Normally, we see for IT services or listed companies, this spend is around 10%. So as a business owner, once you use this metric, and if you see that you are beyond 10%, this is something that you should definitely action. So the metric will actually act like a red flag. I'm beyond 10%, I need to do something about it. Now, if you are within 10%, it's not that all is good. You need to make sure that you optimize it further, right? So one of the ways that you can do is you can look at what is your customer acquisition cost by channel. Okay, the spend that you are doing in terms of marketing and sales, the channels that you are using, where can you spend minimal and get the maximum return in terms of leads generated or business opportunity. So these are the three metrics that, so to say, a business owner needs to look at when he is looking at conserving cash or making sure that he's wanting to optimize it. Now, once we look at these metrics, it's important to put it in the form of a tool or a process, a tool which will bring in efficiency in terms of cost management and monitoring the waste. How does one go about doing that? The first step here is to identify what is your cost structure. What are the fixed costs that you're incurring on sales, marketing, and general administration, which typically have no connection with regards to what your revenues are. They're independent. Whether you do business, you don't do business, whether you execute projects or not, these are costs which you have committed. The second set of costs is the variable costs, which typically move in line with your revenues. So you can reduce or increase them as your revenue changes. Having identified the costs, the next step is to look at the number one cost line item in the cost structure for a services business. And that is the salary or the payroll cost, which constitute about 70% of the overall cost of a services business. This is a big item to work on. The way to look at the salary costs is obviously to create a salary pyramid. create a salary pyramid for your business. If you're already doing it, fine. If not, please create one. If you can't, please take help of an expert. But it's extremely important to create a salary pyramid and see if it is right sized and right shaped. When I say right sized, it's extremely important that it is right sized, because if your level of activity, if your customer acquisition or the projects that you're delivering have actually gone down, then even though it is right sized earlier, you may need to reduce it further because there is idling happening in your business currently. When I talk about right shape, we need to really see, if there is a flab that we have accumulated in our business over a period of time, or are there any avenues where we can optimize cost. So for example, if you see the one on the right side, you can see that it is not a right shaped pyramid, right? Some businesses have a pyramid which is broad on the top, what we call as top heavy. It's important that during these times you actually look at how you can get the senior management on board and put in temporary salary reductions, or making sure that we bring down the cost of senior management. At the same time, we also look at, are there any non-performing employees, or is there any waste in terms of the people cost that we are incurring, so that we make it not only right sized but also right shaped. And as business owners, I'm sure you will agree that while this is a sensitive aspect, we need to be objective about it, because at the end of the day, it is question of survival of the business itself. So we've spoken about the number one line item on costs. What about the other costs, the remaining 30%? I think as a business, it's extremely important that we create a culture of critically evaluating costs on an ongoing basis, not only in terms of the business value that they are creating, but also how they are contributing to the bottom line. I see Cognizant, one of the companies that I see, they do this phenomenally. In every aspect, this is something that they have brought in as part of their culture. So even though it is a B or C category cost, it's extremely important to look at the business value contributed by that spend, or the contribution to the bottom line. The other myth that we have, and it has been a fact for so long, that you cannot do anything about fixed costs. Okay, what can you do about, for example, facility rentals? I mean, whether you get enough business or not, if you are committed to a rent agreement and the rental costs, irrespective, you have to pay. But working with different businesses, what we have seen is we can actually variabilize some fixed costs like the rentals, because times are tough, and even the landlords know that the business is not its normal. So we've been able to get as low as 50% reduction in the existing rentals. We've seen that happening for some of our clients. The other trend that we have seen is, because this lockdown has forced companies to work virtually, a lot of companies have actually invested in a tech stack which actually enables working from home as effectively as working from office. There are collaboration tools available, there are virtual office platforms available, and with these tech stack available, now some of the businesses that we work with and I know are actually thinking, even after the lockdown, whether I should be incurring those rental costs or whether I should optimize it, because I have been working fine, I have a tech stack to support, and my productivity has actually gone high. So we are seeing that some of these fixed costs that we used to look at in the past are now being actually variabilized. We're seeing companies like TCS actually making announcements that a large portion of their workforce is going to work virtually by a certain time span. So fixed costs can be variabilized in the short run. You can optimize your cash burn. You can improve the runway for your business. That's the good news. One other thing that needs to be kept in mind is, once we look at cost optimization, what is our speed of execution? Because every week spent, every month spent, you're actually draining down the cash. So I strongly recommend identifying the top 3 areas, applying the Pareto principle, identifying the top 3 areas where cost optimization can be done and maximum savings can be achieved. These are quick wins, and these kind of bring the morale in the business quite high, because when you see that the runway is improving and there is positive news, kind of improves the morale. So speed of execution is extremely important. The last point before we complete this section, and I think it's a very important tip as business owners, as CFOs, as business leaders, I think we need to be aware and alert to the fact that while we are doing cost optimization, cost reduction, we are removing the flab, okay, the waste, but we are not eating into the critical mass to the extent possible. I know there will be some hard decisions to be taken, but we need to make sure that we don't eat into the critical mass, because once we get into the recovery mode, once we get into our normal operations, the faster we are able to get up and start walking or running, the more competitive advantage it is going to create for the businesses. Vishwas, I hope I have been able to answer the questions that you've put forth to me.
Yeah, thank you. Thank you, Mayuresh. I think that was really insightful. And there are a few things that I have learned personally.
Hi, I think hopefully that addresses the quick thing on the financial metrics. So if anyone has any questions around the metrics or otherwise, feel free to ask that, and either Mayuresh or Vishwas will be able to answer that. We will be also conducting the second part of basically this series on the 9th of December. Again, it's a kind of a short webinar. The whole thought process is that in 20 or 30 minutes, you get the quick gist which you can implement to your respective businesses.
Thank you, Vishwas and team. This is helpful.
Cool. Thanks all for attending this webinar.